Welcome to the Intermediate Accounting course. This course can be challenging, but we will describe the concepts in an easy-to-understand way and make it even easier by providing examples and practicing questions with you. We will be using the book Intermediate Accounting, written by Donald E. Kiso, Jerry J. Wagant, and Terry D. Warfield. This team of authors is well regarded in the field of accounting for their clear explanations and comprehensive coverage of complex topics. Let's start with the topic, financial statements and financial reporting. Understanding the financial reporting environment. Like other human activities and disciplines, accounting is largely a product of its environment. This environment includes conditions, constraints, and influences that are social, economic, political, and legal, all of which change over time. As a result, accounting theory and practices have always evolved and need to continue to evolve to remain relevant. Over the past decade or two, the accounting landscape has changed dramatically, being shaped by many factors, some good and some not so good. These include spectacular business failures. Major corporations like WorldCom Inc. and Enron, along with the accounting firm Arthur Andersen, faced significant scandals and failures that reshaped accounting regulations and practices. Capital market failures. Events like the subprime lending crisis and subsequent bank failures highlighted weaknesses in the financial system and led to changes in financial reporting and regulation. Near bankruptcies of several countries. Economic crises in various countries have affected global markets and influenced accounting practices worldwide. Globalization of capital and other markets. As businesses operate on a more global scale, the need for standardized financial reporting across countries has increased. Globalization of financial reporting standards. The adoption of International Financial Reporting Standards, IFRS, aims to create uniform accounting standards across the globe. Increasing use of more sophisticated technology. Advances in technology have transformed how financial information is recorded, processed, and reported. Increasing access to information. The internet and digital technologies have made financial information more accessible to a wider audience. These factors, among many others, provide accountants with great challenges but also great opportunities. Essential characteristics of accounting. Accounting can be best described by its three essential characteristics. 1. Identification, measurement, and communication of financial information. 2. About economic entities. 3. To interested persons. Example, when a company purchases new machinery, accounting helps identify the cost of the machinery, measure its value, and communicate this information to stakeholders like investors. Financial accounting versus managerial accounting. Financial accounting, financial reporting, involves preparing financial reports that cover all of an enterprise's business activities and are used by both internal and external parties. These reports include financial statements that are used by investors, creditors, and others to make economic decisions. Example, a company's annual report, which includes financial statements, is a product of financial accounting. Managerial accounting involves identifying, measuring, analyzing, and communicating financial information to internal decision makers. This information may take varied forms, such as cost-benefit analyses and forecasts that management uses to plan, evaluate, and control an organization's operations. Example, a budget report that helps management decide on future projects is a product of managerial accounting. This course focuses on financial accounting, while managerial accounting is covered in other courses. Financial statements. Financial statements are the principal way of communicating financial information to those outside an enterprise. These statements provide a firm's history, quantified in terms of money. The most frequently provided financial statements are 1. Statement of financial position, balance sheet. Shows the assets, liabilities, and equity of the enterprise at a specific point in time. Example, imagine a balance sheet showing a company's cash, accounts receivable, and equipment on one side, and its liabilities and owner's equity on the other. 2. Statement of income, comprehensive income. provides information on the enterprise's performance over a period, including revenues, expenses, and comprehensive income. Example, an income statement for a company might show its sales revenue, cost of goods sold, operating expenses, and net income for the year. 3. Statement of cash flows. Details the cash inflows and outflows from operating, investing, and financing activities over a period. Example, a cash flow statement could show cash received from customers, cash paid for new equipment, and cash dividends paid to shareholders. 4. Statement of changes in equity. Shows the changes in equity, including profits, losses, and other comprehensive income items. Example, this statement might show the beginning equity, add net income, subtract dividends, and show the ending equity for the period. By understanding and working with these financial statements, you'll gain valuable insights into an enterprise's financial health and performance. We'll go through each concept step by step with examples and practice questions to help you master intermediate accounting.